Hi, good morning. This is Kang Wei here from Phillip Securities Research. Today we'll be talking on the sector report for the autonomous vehicles, which we feel is the next big thing in the technology sector for the US side. So without further ado, let's start on the presentation. Okay, so autonomous driving, aka driverless cars, basically is vehicles with the ability to pilot themselves. As of 2013, four US states have already passed laws permitting the autonomous cars. We believe this to be the next disruptive technology, as the Apple CEO Tim Cook has said, the cars will be the next ultimate mobile device. And many companies actually are projecting to have their first driverless cars ready for purchase by 2020, which is a short 4 to 5 years time. So let's take a look at how it works. As you can see from the image here, there's a lot of different sensors, your radars, cameras, lidars, GPS that will be involved in piloting a driverless car. Right now, GPS specifically needs to be improved a lot more to be specific to the centimeter while piloting a car rather than the current one, which is only accurate up to a couple of meters. Other things that are also expensive and needs further development are your lidars, which are your light, something like a light radar kind of thing. Other things that requires for driverless cars as well will be your onboard processors. Needs to be able to handle a constant stream of information from your different sensors without lag, because if you're driving a car, any little bit of lag in the information processing may cause very bad circumstances to happen. Next, your internet connectivity as well. Your driverless cars will need to be always on the go and wireless. And there's this new thing called the V2X communicators as well, which is a new technology that will allow the cars to be able to ad hoc link into ad hoc networks and allow them to receive information from different other cars as well on like road conditions, obstacles, or traffic jams, etc. Besides the hardware components, we also have the software components for your driverless cars, which will be things like your operating system, which is driving is actually a very extremely complex thing that while humans are able to do more or less automated, your OS must be able to adapt at a blink of an eye to any change on the road conditions. Um, there was a report that goes saying that the code required for driving would be at least 17 times more than even what a Boeing 747 would use. um, so it's different companies are still striving to perfect their operating system at the moment, and no one company has been able to decisively come up with a operating system that's perfect yet. Other software that might be useful, that will be used in driverless cars would be your high definition embedded maps, because if your driverless cars needs to be able to drive around without any human input, you need your high definition maps to be able to accurately bring you to your destination. And as well as the user interface, as I said earlier, the car is the ultimate mobile device. So when you are no longer having to drive your car, you have a lot of free time inside the car itself, and you can be able to maybe use apps, watch shows, play games, depending on what the passenger wants to do. So implementations, there are certain features that are already available inside to a lot of cars right now. I'm sure a lot of you who drive will be familiar with your parking assistance, which uses cameras and sensors to actually drive the car into the parking space. Technology has actually been available since 2006, but Japan actually developed the technology in its most primitive form since 1999. Adaptive cruise control, which is using your radar or lidar to allow the vehicle to adjust its speed with respect to traffic. This has also been available in Japan since 1997. And the automatic braking emergency brake, Mercedes-Benz actually was the one who premiered the technology back in 1996. So as you can see, these technologies have been around for about 15 to 20 years. If you think about it, it actually has been available for quite a while, and only right now has been started to been able to right now been able please wait a while while we have a give me a second. Hi, sorry about that. Okay, let me repeat myself. So as you can see, a lot of these technologies have been available for about 15 to 20 years already. It's only right now starting to be in mainstream applications. So if you were to apply the same thing to an actual autonomous car, later we'll talk about the timeline of how what we think it will be fully implemented. But other sectors that have actually already have these autonomous vehicles in use is, for example, your trucking. In the USA, actually trucking spends a lot of money on labor costs, and a lot of the drivers, there's a lot of drawbacks because they need to sleep, they need to eat, and the US actually by law mandates a certain number of driving hours a day for drivers. So Daimler and Volvo have actually started testing autonomous trucks to be able to pilot the trucks such on autopilot such that can save the cost on drivers to drive their supplies around. Another one is Rio Tinto. If you were to Google Rio Tinto's Mind of the Future, you can see that there's a whole presentation and video on how they actually have a fleet of 69 autonomous trucks that they actually use inside the iron ore mine in Pilbara to actually haul and process the iron ore from place to place. So yeah, these are examples of things where autonomous vehicles, besides just being on your roads itself, have actually purpose and use. Okay, so let's talk about the timeline. When it first arrived, we predict that likely it will be available at a premium price because of the high cost of a lot of high-grade components like your LiDAR and GPS. This will make mass production at when it first comes out very cost prohibitive. So it's likely that, like a lot of the car technologies, when it first premieres, it will be available for early adopters at a premium price, and then subsequently it will more and more of these features will show up in the next 10 to 15 years following when it first arrives, assuming there's no major incident that causes the pushback of autonomous cars. Subsequently, what the mass use of driverless cars will do to things like personal car ownership and such, I think it's beyond the scope of this presentation. But it's interesting to take note that how driverless cars will actually affect the car ownership around the world. So you can see in the timeline here in 2011 and 2014, these are when the electronic stability control was mandated in the EU and USA. Sorry again, pause for a while. Apologies again. Let me start again from the timeline. So you can see that from 2011 and 2014, the electronic stability control was mandated in the USA and EU, and the Tesla CEO Elon Musk actually expects that they will have a first fully autonomous Tesla model ready by for approval by 2021. And Google, Toyota, Ford, and many other manufacturers actually expect to release their first autonomous vehicle by 2020. In fact, Japan has said that they aim to, for the 2020 Tokyo Olympics, they aim to have a fully autonomous fleet of taxis to bring the guests for the Tokyo Olympics everywhere in Japan itself. 2025, this is when the USA Secretary of Transport expects driverless cars to be in use globally. And Uber CEO actually by 2030 expects their entire Uber fleet to be fully driverless. So yeah, that you can see that 2030 is when probably a lot driverless cars will be probably majorly accepted by everybody and probably in use. So right now we'll go to the main gist of this presentation today, which is what are the potential companies you can take a look at if you believe that the driverless cars will be the next technological frontier. We'll mainly talk about the publicly listed ones, which for now, for example, for the hardware component side, if you want to make a play on the hardware components, we believe that Cisco Systems is a potential that you can take a look at. This being one of the world leaders in networking equipment. When your driverless cars are in place, there will probably be an increased demand for wireless networking equipment. They also invested in Coda Wireless, which is an Australian company which is developing this V2X communications, which again is technology that allows your cars and different vehicles to actually make an ad hoc linkage into a network to be able to exchange information on the go. Right now, this may be slightly outdated, but it should be somewhere around these figures. We believe that it's slightly undervalued at 13.3 PER with a 3.88% dividend yield. Delphi Automotive is one of the car industry's largest suppliers. They don't actually produce a lot of cars, complete cars themselves, but they provide a lot of the technologies that different car manufacturers will use in the production of their own cars. So recently at the Consumer Electronics Show, they actually showcased a fully autonomous car as a concept vehicle, which shows that have the ability to produce a lot of the different technologies and components of the cars. So if the driverless cars arrive, many different car companies will likely look for them to outsource a lot of the manufacturing of the smaller components of the cars. So they are likely to benefit from this increased demand. Believe that they are slightly undervalued at 16.64 and a 1.68 dividend yield. Besides that, you have your Mobile Eye, which is a relatively new company. They actually develop your camera-based advanced driver assistance systems, so your LiDARs, things like that, and the cameras. It's more of a pure play for investors who seek this camera-based advanced driver assistance systems. There's significant risks of other companies developing their own products, but recently Tesla announced that Mobileye would be powering the autopilot feature for all their Model S cars. So if the Mobileye does well for Tesla, other companies might also follow suit and decide to outsource the camera-based systems to Mobileye to be able to pilot it rather than wasting the money and developing it themselves. Unfortunately, at this point in time, it's at a 151.78 PER, so we feel that it's quite overvalued and there's a significant risk if you want to go in at this point in time. They also do not pay a dividend at this point in time. Okay, the other thing is NVIDIA, primarily known for developing graphic processing units for gaming markets, your graphics cards and system on chip for mobile computing. But in 2014, they actually transitioned into a new segment, which is the auto industry. And earlier this year, they unveiled their first vehicle AI supercomputer, Drive PX2. So it's powered by the NVIDIA GPUs and actually boasts a 360 situation awareness around the car. It's capable of processing data from 12 different cameras, LiDARs, radars, and ultrasonic sensors. So, as mentioned before, you need to have a very good processor inside the car itself, which is able to process information without lag in order to be able to pilot the car properly. So we believe that NVIDIA is positioning themselves very well. They are currently fairly valued at 30.3 PER with a 1.42% dividend yield. Their 5-year average PER is 20.8. They've actually grown significantly in their PER over the past couple of years due to their dominance in the graphics card gaming market. So we believe that if they are able to repeat the same success in the driverless cars processing computers, they could have a bit of a growth potential here. Software-wise, many of you know Nokia for their handphones, but ever since they sold their handphone unit to Microsoft, Nokia here is one of the leftover departments inside the Nokia company itself, and they are actually the market leader for automotive embedded maps. If many of you drive cars that have a GPS system embedded into the car itself, chances are very high that the Nokia here is the one that provided the maps for those GPS systems. So your driverless cars, as mentioned, will require extensive up-to-date maps for their onboard computers to be able to bring you to your destination properly. So right now, they are with Nokia being such a small and lean company ever since they sold off their handphone component, they could potentially be a potential partner or even an acquisition target for bigger companies looking to beef up their embedded maps inside their cars itself. Right now, it's trading at a 18.7 PER and a 2.54% dividend yield, which we feel is quite fairly valued. Next, we'll talk about Google. So Google was actually the first company to venture into the space, and they actually made they had a significant head start on development of driverless cars. So they boast that they have driven over 1 million miles on their self-driving vehicles test. And if they are able to be actually the first one to actually develop the OS, it's likely that they will be able to reap a lot of benefits by licensing the OS to other car developers. As the OS will likely, if they are the first ones to come out with the OS, chances are that other companies might not feel that there is a need to spend the money to develop their own OS and may just license the OS from Google. And if Google is able to be the main OS used in a lot of driverless cars, there's a chance that they may be able to link to their Android OS as well to allow apps to seamlessly transition from their Google mobile devices to being used in the car. So maybe you can play games on the cars or use any of the Android apps from your phone straight away into the car itself. So there's actually a large amount of benefits that Google might be able to reap if they are able to become the dominant OS in driverless cars. Right now, they're trading at 31.34 PER, which we feel is fairly value for Google, but they unfortunately do not pay a dividend at this point in time. Others you can look at is Tesla, which is well known for being an electric car manufacturer. They recently updated their Model S with the summon function, which actually allows the car to park itself. And actually, when you press the button, it actually can unpark and return to the owner and at a push of a button. So recently, their share price has been beaten down on tempered expectations. They used to trade, I think, at quite lofty valuations, but I think because of there's a bit of pessimism about them, their share price took a bit of a beating. But should they be able to produce the a commercially viable autonomous car, this company could potentially regain favor in the market, and the exuberance could lead to a higher trading price. They're unfortunately making a loss at the moment, and we feel it's undervalued given the risk at this point in time. So trade with caution. Other special mentions is Apple. So there are market rumors that Apple is also developing a self-driving car. Recently, they've hired several auto engineers from Tesla, Volkswagen, and other car manufacturers. But Apple, as of now, has yet to confirm or deny such rumors. But as I mentioned at the start of the presentation, Tim Cook has actually said that the car is the ultimate mobile device, which may hint at Apple's desire to also participate in the self-driving car space. Baidu also has recently partnered with BMW to produce a self-driving car for the Chinese market, and they claim to have completed successful tests on the streets of Beijing. So China actually has a very large automotive market. So if driverless cars were able to produce, Baidu may be able to claim a big share in the automotive market as well. Other special mentions would be Ford and Honda. These are also listed on your US exchange. They also announced their desire to continue doing their testing and receiving our approval to do testing in California. So these are some of the US listed companies that you can take a look at. But as of now, they do not seem to be the front runners for developing this technology. Okay, so now I'll pass over to Jeremy, who will talk about the CSI 300 index for technical analysis. Thank you.
Morning guys, Jeremy here. I'll cover briefly on the longer term outlook of CSI 300 based on TA. But just before I start, I would like to go through with you guys a simple concept of a series of higher high, higher low, higher high, and lower low, lower high, and lower low pattern. So let's imagine that whatever that I'm going to draw is the price movement. And let's start at the bottom left panel and with price bouncing off the low here. So at this point, I would like to mark up a initial high reference point shown by this H here and an initial low point over here. So imagine price starts to enter into a bull market and starts to rally for a period of time until it's being met with some resistance overhead. The price undergoes some retracement. This area over here forms our higher high point, and obviously this is a higher high as compared to the previous high over here. So after some retracement, price continued to move ahead with this uptrend, and after which price go ahead and broke the previous higher high to form a next higher high point. So from this point of view, what we have here is this next low point here actually forms the next higher low point as compared to the previous low here. And ultimately, when price reaches the top, it forms the last higher high reference point here. So when this happens, let's assume that price starts to have a trend reversal, and it starts dropping down and starts to bottom bounce around this area, but it failed to take out the previous high area. So from this point of view, we do still have a higher low point as compared to the previous low here. And after which, our first signal for the trend change would come is when we get a break below this previous low, higher low point. So imagine from here on, price went through some retracement, but failed to go up any higher to the previous high. So from this point of view, we actually get a change in sentiment when price actually forms a lower low point because it broke this previous higher low area. So once we are in this particular area, and the key area that I want you guys to take note is this support area that I have drawn, this horizontal line, will form the basis to actually tell us whether the sellers are ready to take price down for the next bear market. So let's imagine from here on, price starts to fall, and once we are at this area, it will be a crucial area to watch how price reacts to this lower low support line. So from this point of view, we actually get another lower high point that more or less confirms that price is trending down. So in order for us to get a confirmation that price has actually entered into a bear market and is ready to take price down for the next leg, we would require price to close below this lower low support area. And once we get the confirmation, it would be the case where price should continue to tumble lower from here significantly to find the last lower low point. And from here on, price should more or less start the next cycle, be it going up or going down. So I will use this lower low support uh, reference a lot for the presentation later on. And yeah, moving on. So here is the CSI 300 weekly time frame chart. So I've actually annotated the boom bust cycle back from 2006 to 2008. So as you can see, price actually went through an exponential rally since 2006 to 2007. And you can see it actually follows the series of higher high, higher low, and higher high pattern pretty nicely. And once it reached a top, price starts crumbling down for 47% from its all-time high of 5891 to a low of 3122. But it forms its first lower low, and price went through some retracement. So like I mentioned just now in the brief explanation on the concept of higher high, higher low, and higher high pattern, this bold blue line, the lower low level of 3122 is a very crucial support area to watch. So once we get the confirmation of both the lower low and lower high pattern, we would require price to break and close below this particular lower low level of 3122. And as you can see, the area that I mark up, once price flows below this 3122 lower low support area, it more or less confirms that price is entering into the next bear phase. Where, as you can see, for the first bear market, price took 47% tumble, and for the second leg down, price fell about 60%. So do remember this percentage number because I'll use them later on. Moving on, this is the same chart, but I actually removed some of the annotation and included the 38.2% Fibonacci retracement level here. So what I want to illustrate here is, as you can see, after price found some base of the low level, the retracement ended perfectly off the 38.2% Fibonacci retracement level. So remember this number as well, because it will be used following on in the presentation. And all in all, as you can see, price fell 72% from its all-time high of 5891 to a low of 1607 for the boom bust cycle from 2006 to 2008. So here are just the summary of what I mentioned in the previous two slides of the characteristics of the boom bust cycle. I'll just move on. And so here it is the current market structure of the CSI 300. Same thing, this is the weekly time frame chart. And as you can see, price indeed experienced the same kind of exponential rally where the series of higher high, higher low, and higher high followed on. from 2014 and 2015. After which, once the top is formed, price crumbled 45% off from its high to a low of 295. Remember, the previous time it fell 47%, and for the current scenario, it fell 45%, which is pretty much similar in that sense. And after the lower low was formed, it went through some retracement to form in next lower high area. So like I mentioned, the key area right now to watch will be the lower low area, which is the 2952 support area. And we indeed got a break and close below on this date around in February 2016 this year. But the close was only a marginal one, which wasn't really a convincing close. So as you can see, after price closed marginally below the 2952 lower low support area, price bottom bounce and hover around that area. So it does give us a sign that price might actually heading down for the next bear leg for another 60% from this lower high area. But a stronger sign would be for the sellers to actually break and close significantly below the 2952 support area. With that, we expect price to fall 60% from its previous lower high area, and that would take us to about the 1607 previous cycle low of 2008 at 1607. So looking forward, this is the same chart to illustrate the 38.2% Fibonacci retracement reaction. Same thing happened over here, like how it happened back in 2008. The retracement took price back just perfectly to 38.2% Fibonacci retracement level, and the rejection happened not just once but twice. And it got rejected perfectly where price starts falling back into this downtrend. So all in all, if price were to fall 70% from its high, just like the previous cycle, then we would expect price to fall to the 1607 previous cycle bottom. And this is just the summary of the previous two slides. You guys can read it. And okay, moving on. This is just basically the monthly time frame chart. And what I want to illustrate here is where the potential bottom or support would be, and that would be at around. There will be a key support at around 2102 level. As you can see, there will be three instances that price rebounded off it pretty strongly around at this highlighted area that I've shown. So expect price to fall to 2102 support area and be faced with some rejection when price reach the area. And sellers would need to break this 2102 and close below it significantly for price to head lower to test the 1606 previous cycle low bottom. So in conclusion, we actually see further downside in the long run for the CSI 300, and potential target for this would be 2102 to the 1606 support area. And to end it off, I've actually overlaid the weekly time frame chart of the CSI 300, and the top panel shows the picture back in 06 to 08, and the bottom panel shows the current market structure. And as you can see, both are actually showing identical patterns. And will the previous cycle play out again this time around? I think it will be good for us to keep monitoring this and see whether it happens or not. And with that, we would like to open the ground for questions, if there is any. Hi, there's a question regarding the correlation between the CSI and SDI. So what I've observed is that CSI 300 does correlate positively to the SDI. And so if whatever thesis that I've actually mentioned would actually play out, then I would expect SDI to follow suit. And I've actually taken a look into the SDI chart, and it's actually showing the same kind of pattern to the one that I've actually mentioned in this particular presentation. So all in all, it's actually looking quite bearish from the technical point of view for the long run. Hi, and regarding the questions on fundamental, as of now, we don't have a coverage on it, but we might actually do a coverage later on subsequently, so do look out for that. And regarding the ETF for the CSI 300, I've actually listed one, as you can see on this PowerPoint slide, the Direction Daily CSI 300 China A share bear one time, which is the inverse CSI 300 ETF, which bet on the downside of this particular CSI 300 index. If there is not any further questions, then we'll end it off here. Thanks for tuning in, and we'll see you guys next week.